Good evening and welcome to this live Ask Me Anything About Property Investing with myself, Saj Hussain. So I've been investing in property for about 15 years now, and every Monday evening at 8:30 p.m. I'm here on various social media platforms to share my knowledge and experience with you to help you get further faster in your property investing journey. So this is an opportunity for you to ask any questions you have around investing in property. Just pop them into whatever platform you're watching this on now. We're live on Facebook, LinkedIn, YouTube, Instagram, and Twitter. So just put a question in the comment section, and as they start coming up, I'll answer those in the order that they appear. My lovely assistant over here will fire up the question on the screen, and whatever's next, we'll just work through those. So really, as I said, this time is for me every Monday to spend with you, to help you whichever way I can, to help you progress in your property investing journey. I've just finished a call a short while ago with my Inner Circle Mastermind group, so it's effectively my mentoring group, and we have a call every Monday evening as well, just before this one. And one of the things we were talking about there was marketing direct to vendors. As the market starts to change, we're in a recession right now officially, but it doesn't really feel like a recession. There isn't anything that we can sense around us that gives an indication that we're in a recession right now. So, however, things will change. And it won't be too long before we start feeling that change. Most furlough schemes are now coming to an end, and you'll see not everybody will have a job at the end of that furlough program as they drop off. Though some of them will find that they're now being made redundant. And as I've said before, as you start seeing unemployment levels start to rise, we'll start seeing a completely different sentiment in the marketplace. So right now, pretty much everything you put up for sale seems to be selling very quickly. The market is still very hot, which seems really strange. When we're in this environment right now, you'd think the market will be slowing down. Now, my view is the market will start slowing down in the coming months, probably towards the end of the year. Normally we get a little slowdown around December anyway, where people are not really interested and thinking about moving house. You know, this Christmas, New Year, people are busy with other things, and a house move is usually not on their mind. So that also causes a little bit of a slowdown in the market. Then in March next year, we've got the stamp duty holiday that we're currently benefiting from will disappear. So come 1st of April. So these are the current things that the indicators right now for us. The market will start changing. When we start seeing the sentiment in the marketplace changing, when people start feeling the market is different, then I think it will be a great time to start marketing direct to vendors. And some of the things I was doing in the last recession, when the market crashed then, was marketing heavily direct to vendors. That was leaflets direct to people's letterboxes. You know, the type you may have seen, the type I mean, sell your house fast for cash, give me a call on this number. That type of marketing I was doing a lot of. So when I say a lot of, I would typically get about 100,000 leaflets printed and take a period of about 3 months to get those leaflets out. So quite big numbers in terms of leaflets. Now, the response rates from leafleting can be very, very low. It's really a case of getting the message out to as many people as you can, and the vast majority of those leaflets will actually get picked up off the mat through the letterbox once they arrive, and they'll just end up straight in the bin. And you think you've put all that effort and money into doing this marketing, and probably 99% of them will end up in the bin, and because the message won't be relevant to the person picking up. But you're only looking for a small minority. So I hope that's useful. So let's start with the questions, and we'll start with the questions. So a few people saying hi, first of all. So the first question is from a LinkedIn user. Unfortunately, I haven't got the name. If you can find the name directly on LinkedIn, let me know who it is. I have a question on planning. In your experience, what scenario would the planning committee ask for a heritage assessment or a bat survey during the planning application? First of all, I've got to put my hands up and say I don't have any experience of this specifically. It's not something I've come across. But heritage, ultimately, what they're trying to do is protect a certain type of building or environment that building is in. And what they'll be looking for is anything that may be affected, like, for example, a bat survey. So, you know, these things will slow down your planning application and will add to the cost, but it doesn't mean it won't necessarily get approved. I think doing the pre-app first, thank you very much. So this is this question from Alfred on LinkedIn. For some reason, the name is not showing up. So it doesn't mean that the planning application would get refused. I would do a pre-app first of all, which is a pre-application, which is really advice before the formal planning application. And that gives you an indication of what the planners are thinking, would they be supportive of what you're trying to do, and then working with them to give them everything they want to be able to get the approval that you need. And if at the very beginning you're getting massive resistance, then I'll be thinking twice about that application. I have made applications in the past where I've had massive resistance from the planners up front, and it's been an uphill battle, which is why I'm saying going forward, this is my preferred route. Pre-app first, understand the planners in terms of what they're looking for. Would they support something like this? What do we need to adjust to get their support? So I hope that gives you a little bit of an indication of my thoughts on that. Thank you for the question there, Alfred. So our next question is from Rajesh, also on LinkedIn. Struggling to get private investors currently. I've got an excellent JV private finance deal I'm trying to fund. How are you finding this time? So Rajesh, in short, my belief is that if you've got very good deals, ultimately what you'll find is that the money will come and find you. Now, that sounds lovely when you say that. It's a case you don't have to look for the money will come and find you. However, there's certain things you need to do for that to happen. So what I mean by that is, first of all, you need to be visible. So your potential investors need to be able to see who you are and what you do. And the second thing is you need to allow your potential investors to get to know, like, and trust you, so that you can start engaging in conversation in terms of potentially working together. And of course, it's important to understand there's two types of potential investment that you are looking for in this way. One is a loan, and this is how I work. So when I'm looking for people to invest with me, it's either a straightforward loan, which is a fixed amount of money for a fixed period of time for a fixed return. So for example, it might be £100,000 for 1 year, say on an 8% return. So it's like a fixed loan note, which is the most simple way to do this, and you don't have to be overly concerned about FCA regulation around that. The money's going to a specific project. The other way to raise money is that of a partner, so a potential joint venture partner, as you mentioned, where you're sharing the risk and the reward in that potential deal. The important thing there to remember is that although your potential investor will be excited about the upside, they will also participate in the downside should that be the case. Just having a sip of water in my mug there. So when you're visible, what you're doing is just sharing your message, what you're up to, and the kind of things that you're doing. So you're attracting the right type of people, and allowing people to get to know, like, and trust you means that before you even invite a conversation, that you'll see that people are already comfortable and know a little bit about you. So one of the reasons I tend to do this, and I run my YouTube channel, I put a lot of free content on there, I'm fairly active on social media, because I'm sharing my knowledge, my experience, my journey, and there's ultimately two things that I look for people to connect to me and reach out to me for. One is if somebody's looking for help to do what I do so they can do it for themselves, i.e. training, coaching, mentoring, in terms of support in that way. So that's potentially a good lead for me. And the other one, if somebody wants to work with me in terms of investing funds in a project. So I'm quite open about that. I spend a huge amount of time and effort helping other people. And 99% of those people won't necessarily move into what I call a paying client, i.e. an investor or a mentee. However, maybe a percent will, and that's okay. I'm completely okay with that. So in the same way, Rajesh, think about what is it you're putting out there? What are people seeing of you? And that will then encourage people to reach out to you. So it's being visible first, so that when you ask for investment, you say, hey, I've got this great deal. I've got a property that I'm looking to do this, and this with. This is what the numbers are. If you're interested in getting involved in terms of lending money for a project, then give me a shout, ping me a message. That's the sort of thing that I would do. And of course, the best time to find money, and you're probably not going to want to hear this right now, but the best time to find money is when you don't need it. What I mean by that is that you're constantly having conversations with potential investors before you ever need the funds, so that when you have a suitable deal, you can just connect the money and the deal together. And just remember, if you are looking to raise money for joint ventures, it's more of a regulated activity around the FCA. that you should only be having those kind of conversations with sophisticated and high net worth individuals, and not anybody and everybody, and not marketing in that particular way. So Rajesh, I hope that helps. It gives you some pointers. I've got lots of videos I've done in regards to raising money. I've raised literally millions and millions of pounds over the years of private funding. So I hope that gives you a few pointers. So next question we've got from Joe on YouTube. Is the next 6 months going to be the best time to buy investment properties in the right areas, and are prices likely to rise again in March and April? Great question, Joe. So a quote that I gave, I think it was last week, I said, when someone's asking me what's going to happen, I said, my crystal ball is a little bit foggy right now. And what I mean by that is there's so many variables in the marketplace, it's quite difficult to predict and gauge where the market's going. We've got some indicators of what's happening. And as I started off earlier on today saying that, I think the market will slow down in the coming months. So in a few months' time, the market will be slower than what it is right now. Maybe Christmas, early next year, we'll start seeing that. Maybe it might be into April after the stamp duty holiday, we'll start seeing a slowdown. But there could quite easily be a new incentive from the government or something else that can happen in the economy that could stimulate the property market again and could prevent a slowdown and the market crashing. If all things being equal, if nothing else changes right now, if things continue on the current course, which is the current level of support that's available from the government starting to disappear, the furlough schemes coming to an end, unemployment will probably start rising, and as that happens, that will be the biggest change that we'll see in the marketplace. An indicator that I normally use to get a feel for what's happening in the market, what I call like a front end on the coal face, is when you start seeing the percentage of stock being sold at auction starting to drop. So when you start seeing maybe only 75% or less of the stock that's been entered into auction is being sold, and 25% plus is being left as unsold, that's an indication. Generally, I find that the market is starting to slow down. So I think, yes, the market is going to slow. You can't guarantee that will happen. So what I would not do was stockpile cash and wait until the perfect opportunity arises. What I would do is make sure that you are liquid, that you can access cash for very good deals, but keep looking for opportunities and make sure that you're doing due diligence on deals. And when you're looking at something right now, rather than looking for good deals, I would look for exceptionally good deals. And what you're doing is building in any contingency in case the market falls or the market drops. Still, overall, you've got a good deal. Remember, when you're trying to work out when the market is at the lowest point, which is the best time to buy because it's the lowest possible point before prices start to rise again, and how is it that we can identify that? Well, the reality is the only way we can tell the market has reached the lowest possible point is once it's past that point and starts to rise, and we can look back and say that was the lowest point. So we're always going to be looking back. So you can't really predict that. I think what you should do is focus on finding very good deals, and you jump on those deals as they become available. And if the market slows down, more opportunities exist. Yes, you'll have more there to choose from. So I hope that helps you, Joe. With that, I certainly think we're going to have some interesting times in the coming few months. So the next question is from James on YouTube. Hi Saj, what's the best way to get an early development appraisal to determine GDV? I've approached a few local estate agents but not had much response. An early development appraisal, essentially, if I think you're asking what I think you're asking, let me rephrase that. I think what you're looking for is a figure for what the project will be worth once it's complete, i.e. the GDV of that particular site. Now, if that's what you're trying to work out, so what you're doing is looking for the comparables of what that finished product will look like. For instance, let's say you're building a block of 10 apartments. So right now it might be, let's say, a car petrol station, which is shut down. You've got planning to be able to build a block of, say, 10 apartments. So what you're doing in that situation is trying to work out what will the end value be of that site. And so you've got to look for comparables of what is currently for sale on the market or what has sold recently, or in some cases what the square footage, pound per square foot is for properties that have sold in that way, and how they're going to be similar to what you're creating. So, for example, just keeping numbers simple, let's say each apartment is typically selling for about £200,000 for a one-bedroom apartment, and so there's a number of those already being sold. There's others that are up for sale. You've got a good indication of what the pound per square foot is approximately, because there's sufficient evidence there of others that have been sold. You can be fairly confident that the ones you create are going to be similar value. Now, when you're doing developments, it takes many, many months. It could be a year, year and a half, even 2 years in some cases before you exit out of that deal, and you've got the money back in your pocket along with your profit. But you don't know what the market's going to be, the state of the market in 3 months, 6 months, a year, 2 years time. So that's the other thing that you need to be mindful of. Just because right now properties are selling at a certain price per square foot at the moment, or a certain price for a bedroom apartment, whatever it might be, it doesn't mean it will continue on that basis. So it should be relatively easy to do that. I think, yes, it's useful to get the opinion of an estate agent, but in terms of the values, all they're going to do is look at the comparables of what's sold and what's currently up for sale right now, and how quickly those transactions are happening, i.e. are they coming up for sale and selling just like that, or are they coming up for sale and it's taking a while to be able to find a buyer, and then those prices have been negotiated down. So the agents really can give an indication of their feeling of the market right now. Is it speeding up, slowing down, is it fairly flat? But in terms of what the values are, these are not too difficult to get from your likes of Rightmove and Zoopla, just to be able to do a little bit of due diligence there and get the information from there. So I think that was the question you were asking. Hopefully that's given the answer. If not, always pop it in the question section again. So the next question we have on LinkedIn is from Bob. What's the best way to value a short lease flat, or where the vendor wants to sell close to the full market value? So I'm assuming, Bob, the full market value is what it would be worth if the lease had been extended. So the easiest way to do this, the way I've done this in the past, mostly with houses as opposed to flats when I was looking at leasehold houses, is to get a price for the extension of the lease or the purchase of freehold. If it's a flat, it's most likely going to be a lease extension to take it back up to say 100 years, 130 years, whatever it might be that you're looking for an extension, and work out what the price of that is. Now, if it's with, say, the local authority, it tends to be much easier to get that information. It's a fairly standard way of calculating it. And if it's a private company that's got that, then they might have their method of calculating that. But you need to establish what that figure is going to be. What is it going to be? What's it going to cost you to extend the lease? So let's use some simple numbers. Let's say right now the apartment would be worth £200,000 if it was on a normal long lease, say 100 years plus, and you've got, say, 30 odd years left on that lease right now. So that means it'd be unmortgageable, it'd be cash buyers only, and as it starts to shrink, the amount, i.e. the period left on that lease, the amount of money that you've got to pay to get it extended starts to increase. So if you can get that figure, let's say, for example, it was 100 grand. It was £100,000 to extend the lease. So that would take you to over 100 years. So you've got to spend £100,000 to get that lease extension. So whatever the property price is right now, let's say it was £50,000, you're going to spend another 100,000. That would take you to 150, and it's worth 200. Now, the numbers might not be like that, but I'm just trying to make a point here. Clearly, that would work because you've got some profit margin built in. But let's say, on the other hand, they want 100,000 for the property as it is, and it's going to cost you 100,000 to get the lease extension, and that will mean you've spent 200,000 plus going through all the hassle of extending the lease. But all you've got is a property that's still at market value. Now, unless there's something particularly appealing about the property, there's something else that's of significant value with regards to doing that deal, it wouldn't make sense. because you've still got to go through the hassle of getting that. And they are, well, depending on where you are in the country, but generally they're not going to be people falling over themselves to try and do deals like that. So you should be able to negotiate the price down. The other thing to bear in mind is once you become the owner of the property, you have to wait a period of time. I think it's 2 years. My mind's going a little bit blank right now. I think you have to wait 2 years before you can apply to have a lease extension. Well, you can do it beforehand, but the freeholder doesn't need to offer you an extension. So the way to do it, and the way I've done it in the past, is to agree for the seller to extend it before you purchase it, and you'll pay for it at the point of purchase. So everything happens on the same day at the point of completion. So you end up with a property with an extended lease on the day of completion, and the bonus is actually that will be mortgageable, so you'd be able to put a mortgage on it from day one at the point of purchase. So Bob, I hope that helps. I hope that answers your question. With these 1-2 sentences, sometimes it's not entirely clear what the question is, but hopefully that's helped and that's answered your question for you. So the next question, Matham on LinkedIn, currently what's better, service accommodation or HMO? That's a great question, but it's a little bit like saying, what do you prefer, red or green? Because they need to be thought about in the individual context. There's way too many variables to be able to give you a clear cut and say one's better than the other. Just to put some context there for you, in our business, we run both. We've got lots of HMOs, and we've been growing our service accommodation business over the last couple of years. Idas, who works with me, he's been working on the service accommodation business, building that as we've been getting better and more refined in the system and the processes of how that business operates. And they're both profitable, they both make very good money. I'm happy to continue doing both. But you've got to think about, if you're starting out, for example, you may not be able to do both at the same time. How much time you can put into this, how much access you've got to funds in terms of purchasing, renovating, getting them up and running. For example, finance, getting mortgages that are properties that are going to be run as SAs more difficult, although more and more products are now starting to become available. It's not so easy. So there's just so many factors that you need to think about, and there isn't really as simple as saying one is better than the other. I think you need to look at what might be right for you based on where you are right now, your experience, where you're based in the country as well also has an impact. And thinking about which might be the right one for you based on that. Personally, as I said, we do both. I have quite a big team of people that work with me, so we're able to split resources and spend some on one. I also founded a HMO letting agency a number of years ago as well, so there's a team that do the management there, which enables us to scale up and do more. And I am a fan of both, but at the right time and in the right locations. So I hope that helps you there with that. So the next question on Facebook from Nasser. Hi Saj, always great to be getting your advice here. In the absence of physical networking meetups now, what do you recommend as the best places to network? Nasser, yes, I'm missing them as well. So we ran probably the largest property meeting outside of London here in Birmingham, but we've not run meeting now for, since February, since pretty much lockdown started. And we've no idea when they're going to start again. Initially, I was thinking maybe by October we'll start the property meetups again. But with everything that's going on right now, I think maybe it's going to be next year now. I really don't know when they're going to start. So it's good that you're thinking about how can we continue the networking even though we can't go into a normal networking environment. Now, I know some people are doing online meetings and online networking. I haven't really got involved in that, and for me, it's not quite the same thing. But one thing I think that you should all benefit from and utilize is social media. We're on social media right now. You're watching this on social media. You're asking a question on social media. So I would try to build my network in that way and participate in groups, for example, engage with your audience, people that you're connected with, ask questions. If you can, if you have the knowledge experience in terms of share your experience with others. And the engagement, as I was saying earlier on, to I think it was Rajesh, about looking for investors, you've got to get people to get to know, like, and trust you. And when you're networking, you're doing a similar kind of thing. You're allowing people to get to know, like, and trust you. So you might be able to do some business, or it's not even whether you can do business or whether you can do business through that person, somebody else. Can they connect you to somebody else? Can they recommend you to somebody else? So I would be, I'd be suggesting using Facebook groups, for example, making sure that you're active in there. And the way you would do that is by adding value, by helping others, but then connecting with people that you think you would like to explore things with further, and then taking that offline to a telephone call or a Zoom call that way. That's what the way I would do it. It's a two-step process, if you like. Make sure that you're involved in social media and creating some engagement with people that you're connected with, and then if it looks like there's an opportunity, take it offline and have a separate call there. So I hope that helps, Nasser, with that. Next questions on Facebook from Saki. Hi Saj, what's the best advice you would give to somebody who wants to get into property investing? Saki, unfortunately, this is a little bit like a piece of string. How long is a piece of string? There's so many factors to consider. So some of the key ones, and I've got a video on YouTube which talks about finding the right property investing strategy. I'd encourage you to go and find that video and watch that. And really what I focus on there is understanding things that you need to think about when you get started in property. So factors like how much time can you commit to the property investing journey? Because there's so many different ways you can make money from property, but you can't do all of them, right? So you've got to think about how much time are you going to be able to commit? And then how much money have you got available that you can put into property? And are you going to be able to access other funds? For example, are you going to be mortgageable? Have you got other investors that are going to put cash in with you? Have you got some more money coming from somewhere else that's going to be able to go into your property investing journey? And people will be in different positions. Some people will be starting with no money. Some people will put in chunks of cash in because they may be exiting from a business sale. It might be that they are putting surplus funds into property from other activities that they do. So everybody's circumstances are different. So you think about how much money that you can put in as well. Then you got to look at where are you based in the country, because different strategies work in a different way in the country. So, for example, what's working in London right now might be very different to what's working in Birmingham, which might be completely different to what's working in Leeds. And so you need to think about the right strategy as well for that particular location that you're based in. Now, you may be based, for example, let's say you're based in North London, and you'll be thinking, well, actually, London is not really going to work for some of the things you're thinking about. Then you've got to think about how far are you prepared to travel. Are you prepared to do half an hour, 40 minutes, 45 minutes from where you are in terms of a radius of looking at other areas? And also, you need to think about your personality and what sort of skills that you'll bring to property. So, for instance, let's say you're from a recruitment background or a sales background, and that might be selling fridges at Currys or recruiting pharmacists. It doesn't really matter. But the point I'm making is those sort of skills or a personality like that, you can be very comfortable speaking to people you don't know, you've never met, from a networking point of view, from speaking to sellers, from speaking to investors. So those sort of skills are valuable and transferable into property. On the other hand, it may be that you're very introverted in what you do and you prefer to be by yourself and your computer. Then you've got to think about what sort of skills are you going to bring? So you might bring analytical skills, it might be numbers, due diligence. That's all the skills that you may be able to bring to your new property investing business. However, you've got to think about what sort of strategies is that going to suit. So when we try to answer what might be the right thing for you, or what advice can you give to somebody about starting to invest in property, I think these are all the things you need to think about before you start. And the single and most important question that we haven't asked when you're thinking about getting involved in property is why? Why is it you want to get involved in property? What is it ultimately that you're trying to achieve? The most common answer is they want to make more money, right? Well, what does that mean? Does that mean you're trying to create more cash flow, more income each month so you can top up what you're already doing? Is it a case you want to create a certain amount of income that replaces your day job income, for example, so you can move into property as a full-time income as opposed to what you're currently doing? or it may even be that you're trying to build up capital over time, so you've got a nest egg as a pension. So, the reason that you're getting involved in property is really important. Then thinking about all these other things I was talking about, your location, your experience, the amount of money you have, how much time you can put into property investing to find the right strategy for you. And that's what will help you ultimately get the best success in property investing. So I hope that helps. I think we're at time, so thank you so much for watching. Make sure you jump on YouTube and look at my videos on YouTube. I've got a regular vlog there. I take you through various property projects. I share the numbers as well with you. If there's more of that you'd like to see, just ping me a message. Let me know on whatever platform you're watching, and I'll try and do more of that kind of content for you. Remember, I'm here every Monday at 8:30 p.m. to ultimately help you get further faster in your property investing journey. My name is Saj Hussain. Thank you so much for spending the time with me, and I look forward to seeing you next Monday.